So welcome back to another episode of Freight and Commodity Talk. Today we have a very special guest with us. He has been instrumental in developing and shaping the freight derivatives market. He's a seasoned veteran with over 30 years of experience, and he's known for his candid and insightful opinions. Please welcome Philippe 𝗙𝗏𝗏.
Good morning.
Morning. How are you?
I'm good.
Good.
Happy to be here.
Thank you. Thank you so much. Obviously, we're a new podcast, so thank you for being brave and coming on in the earlier stages. People won't know this, but you and I have known each other for 12 years.
Yeah.
And I was a dry FFA broker. That was my first ever job. And I have a lot of close friends who are in this market. So the topics we're going to be talking about today are something that are it's very close to my heart, and it's obviously something you're really passionate about. You've been in the freight derivatives market since the beginning, basically.
God,
You're more or less a founder of this market. So let's, have a conversation and tell the listeners what drew you to this space and what keeps you coming back.
Oh, what drew to the space is pure coincidence. Right place at the right time.
Yeah.
I was a young dry cargo shipbroker at 𝗙𝗏𝗏𝗄𝗏.
Yeah.
After 4 years, I had enough. I wanted to do something else. And my boss suggested I wanted to do a shipping finance course, a master's course. So I went to Plymouth.
Yeah.
And in the middle of that, the Baltic decided to start a dry cargo index on the 2nd of Jan 1985. And that was in the middle of my course. And my boss said, listen, we are going into this market, but we're asking you to stop your course and jump straight in.
Oh, wow.
And we're starting on the 1st of May because of the day the market opens. I was in those days BIFEX. And I I was living in those days just outside of Plymouth in sort of a little flat on a beach.
Yeah.
It was lovely. So I said, give me the weekends. I'll run around and go have a swim or whatever and think about it.
Yeah.
Because it was a big thing for me to stop the course and then suddenly go into a field.
So you never did your degree?
No idea. I didn't.
Wow.
I have no clue. So on Monday I called him and said, okay, done.
Wow.
So within days, we were developing a joint venture with Cargill Investor Services to do that.
Okay.
So I literally, between the beginning of January and the 1st of May, ran around like a headless chicken trying to understand what these derivatives were. I had no clue. Went to Chicago, went on the London, on the exchange, on the floor. And so I learned very, very, steep learning curve. Great fun. But on the 1st of May, I was there with a phone, a Reuters screen, an assistant, and I had 3 clients.
Wow. Who were
I
they?
had Ian Bland.
Yeah.
I had my father.
Yeah.
And a friend of my father. That was it. And I was shitting myself, basically. I was not really saying to myself, what am I doing here? And so that was really the beginning of my introduction into that world. So that was 85 to 88.
Amazing.
That's
𝗙𝗏𝗏𝗏𝗏. Yeah.
And after 3 years, there was a default on one of our clients, and 𝗙𝗏𝗏𝗄𝗏 at the time panicked and didn't know what to do, and they said, the team is up for sale. At that time, Ian Bland had joined me.
Yeah.
And Robin King.
Okay, yes.
So that was a team with a lady that I see still, it's called Camilla Wall. That was our back office. And then we, after that sort of little hassle within that client, and 𝗙𝗏𝗏𝗄𝗏 is not willing to continue, we basically went to Clarksons.
Wow.
And that's when Clarkson Wolf started, which was a joint venture between Clarkson and Rudolph Wolf. What was Rudolph Wolf? One of the largest metal brokers and traders on the LME. That was part of a Canadian group at the time. They don't exist anymore. And so we did Clarkson Wolf. Then Rudolph Wolf wanted to get out of the environment, so it became Clarkson Securities. So then that's when we started. The first FFA traded in 1992. That was us, Clarksons, and the first tanker FA at Clarksons as well in 1995.
Okay.
But effectively, we developed the whole environment by pure luck.
Amazing.
Because in those days, there was a thing called Route 2 Gulf Japan.
Okay.
54,000 tons of HSS. And they had these clauses where you could cash in early. So it was like they had an alternative to cash settlement, from cash settlement or physicals. And there was, so because there was a Route 2 in the index, in the Baltic Freight Index at the time, you could cash out if you wanted, if you declared it. but it was always in the charter's option, not in the owner's option. Funny that is, huh? So we said, well, this is ridiculous. People should have the option on both sides, on the buy side and the sell side. And that's how we came up with the idea of the FFA. So you had a paper contract en route to Gulf Japan. And what it was, effectively, we took a swap contract, interest rates, we called an FRA.
Yeah.
We took the R off, we put an F, and we just copy and paste. That's all we did, the first ever contract. It was a 2-page.
This is fascinating. I never knew.
Yeah, and then so the first contract was between 𝗏𝗏 and Berwain.
Yeah.
That was a Gulf Japan, I think it was $26.20.
Wow.
And that was done. And then we were, in fact, for 3 years before the SSY and the FIS came around, we were the only, we were a big fish in a very, very small pond.
Yeah.
But we were doing the buy and the sell on Gulf Japan with 25 clients. So the space has just grown from there. And then the big push was 2000, 2001, when, of course, FIS, SSY, other brokers came in a big way. And China came into the WTO, and the whole thing just went boom. The big issue that we had at the time is that it was OTC with credit risk. So is that documentation? Massive credit exposure. And then 2008 happens, and then everybody just...
it went crazy, right?
It went to bits, basically. The whole market went to bits. You had, more than, I can't remember the amounts, but it was close to $2 or $3 billion that was just gone missing somewhere because of people not performing.
Wow.
Oh yeah, so there was the famous Chiswell Street Brewery meeting where all the creditors had a meeting. There were more than 400 people in that big open room, and all the major guys were there, and everybody was looking at each other. You owe me that, you owe me that, and that was a...
That's like the Wild West.
So the boss of, for example, from Cargill Freight, standing on a table with a list of counterparties. You owe me money, you owe me money. What are you going to do about it? I mean, this was big stuff. But it meant you shouldn't forget that in those days, in 2008, the market basically went to zero. Yeah. The market lost 95%. Between the middle of the year till the end of the year, the market went to $1,000 a day.
Wow.
So there were a lot of commitments where people couldn't pay it because they had exposure that they couldn't fulfill. So just to come back to your question, why do I keep coming back?
Yeah.
Is because it's an evolving beast. It's something that I've been, of course, very passionate since the beginning because I happened to be at the right time, the right place to start it with my colleagues, effectively with Ian and Robin. And so from there, I keep coming back because I want to make sure this baby evolves in the right way.
Yeah.
And I know it sounds a little bit sort of churlish or whatever, but I really feel that there's a lot of companies that come into this market. It's not that they need to know the history, but we need to keep this market on the right track.
For sure.
To make sure that we attract the right people, to make sure the volume grows, to make sure the market gets more known, because it was a sort of a little club, and then it became a bigger than a club, and then became a niche market. And now we're at a stage where, we have to go somewhere. We have to go to the next stage, in my opinion.
Absolutely. And, being such a key player in the development of this, and as it started off, it was primarily a hedging tool for shipping companies. But can you tell us a bit more about some of the most significant innovations that you've been a part of? Obviously, the foundation you've built, but the development, let's say that was phase 1. Let's talk about the innovations of phase 2.
Yeah, I mean, you have to realize that at the beginning, the push of the people who wanted to have this market were not the ship owners. They were the people with the cargoes. The Cargills, the Dreyfuses, the BHP, all these kind of people who have already a lot of experience at that time when the FFA started in other commodities. They were hedging grain, they were hedging oil, they were hedging their
so they were
exposure,
experienced,
interest rates, currencies, whatever. So they had a know-how, and they were trying to impose on the freight market once that the Baltic Exchange decided to start indices. The Baltic Exchange decided to start indices because they were pushed by the same people.
Yes.
So it was all driven by the cargo side. Yeah. Even to this day, I would say that the ship owners are still lagging behind in 2024. There's still a lot of ship owners out there who are not equipped or who are not engaged in the way they should be engaged in relation to the risk they have on the water. So it's still very much cargo driven. Of course, the evolution has been that there's a lot of financial people coming in.
Yes.
So that's something we'll talk as well.
Yeah.
But the biggest sort of milestones is obviously going from a freight futures contract that was representing 3 different sizes. It was a big mix of things. And that was more of a punter's market.
Yeah.
You couldn't use it for hedging purposes. So that's when the Baltic decided to introduce the TC averages on Panamaxes, Capes, and later on Supras. That then it became clear that you could develop a product that was more closely related to the exposure that people had.
Okay, yeah.
Because from an accounting point of view, for example, a lot of the ship owners these days look at the market on a dollars per day exposure.
Yes.
So why? Because they say, I've got 10 ships. That's 3,650 days on the water, apart from dry docking. But basically, these ships are on the water all the time. So that's your exposure.
Yeah.
So how many of these days do you want to cover? How many of these days do you want to hedge? Is it half? Is it 10%, 20%? So that's where the whole thing developed. And Cargill and Dreyfus and Bunge, they have a dollar per ton business.
Yeah.
But they are looking back in terms of exposure, in terms of risk, again, days on the water. So the evolution from dollar per ton vague index into a more precise index on time charter exposure on various types of ships was a big milestone.
And would you clarify that as phase 2?
No, I would say
Still
that
phase 1?
Yeah, the little phase 1 is BIFEX. Then the real FFA phase 1 is the beginning of the FFA in 1992 until you get into the clearing. I mean, for me, the OTC non-cleared with credit risk is for me we were crazy. I mean, we as brokers at the time, we didn't realize how much exposure people were willing to take on their books.
Wow, yeah.
And I'll give you a little anecdote on that, which will stay in my mind till the rest of my life. It was in 2007, so the boom of the market, China index, we had time charter rates on Capes at $100,000 a day. And I was asked by Mare Forum to give a speech on risk management in Sorrento, so near Naples, okay? So I was in front of me, I had all the Naples ship owning community, plus traders, and I was asked to talk about risk management. And he knew exactly who I was. And I knew what was happening at the time. There was a company called 𝗙𝗏𝗲, who was like BHP at the time, doing a lot of sleeving. So they were doing lots of sleeving because they were taking $250, $500, and they were raking it in, but putting on their books massive credit risk.
Yeah, for sure.
So I went to explain that in front of them. I said, guys, I think you should look at clearing. I think you should go into clearing because clearing was already available at the time, because you are completely overexposing your company, because what you have on the books as credit risk is probably 50 times the value of your business.
Wow.
And the guy in front of me is at the front, at the end of my speech, stood up and he said to me, Mr. Van den Abeele, who do you think the hell you are, coming here to tell us how to run our business? We do things the Neapolitan way. Well, the Neapolitan way, once the financial crisis, they all went bust, basically. They all disappeared. Can you imagine, they even issued bonds.
Wow.
The family of the 𝗙𝗏𝗲 issued bonds that was bought by the village, for all the people in the village, in order to cover or try to cover the costs of what could happen in case of a credit default. Of course, the whole village was bust.
Oh, wow.
And it was a very sad story, but the extent of what happened there was enormous, because people didn't realize what the risks were. They had no clue on the ship owning side how much they were exposed compared to the real value of their business.
Yeah, of course.
So 2008, clearing, massive.
Huge.
But what was extraordinary is that the clearing came in within 6 months. The whole market was cleared.
Wow.
99%. And since then, that's the way it has been. So there's never been a return to eventually do some OTC non-cleared. So we're now, in my opinion, at the end of phase 2, which is the OTC cleared, because what is stopping the market to grow even further is to become a proper futures product on an exchange.
Okay.
That's where we are.
I just want to dip into something that my old boss, so my first ever boss was John 𝗏𝗏𝗏𝗏 at FIS.
Johnny B.
Johnny B.
Yeah.
So alongside Johnny B, you've developed the Independent Freight Forward Agreement Association, EPHA.
Yeah.
How has that come about?
Well, it's come about literally a discussion with Johnny B and me, and in the sense that I'd been previously the chairman of a body was called the FMIUG, the Freight Market. I can't remember the exact acronyms, but this was a body that was representing traders that was independent from the Baltic.
Yeah.
And that was discussing matters about the market. And I was not the last chairman, the one before that.
Yeah.
And then they had one more chairman, and then basically the body disappears because the Baltic then introduced these Baltic councils where they asked people from the outside to be part of these councils to give them advice on how to not run the indices, or how the indices should evolve, whether it should change size of ships, or it should change routes or whatever.
Yeah.
And so I was done in a way that it was very much a Baltic controlled environment, which is fine because their job is to produce indices, produce data for the industry.
Yeah.
But there was no independent voice of the people who actually take the risks. I'm sorry to say.
Yeah.
I mean, and to put it in a vulgar way, the people who put their balls on the table had no proper not proper representation as far as I'm concerned, or not an independent. Also, very important, it's Chatham House rules, whereby there is no press, there is nothing, and nothing comes out of what is being discussed. So therefore, you have to understand these big companies are not allowed to talk publicly about the marketplace. They're not. These guys have got very strict rules, but there they can discuss things.
Yeah.
So it's to create an environment where you can really highlight problems that we have as traders, or that the brokers have with their clients, that the clearinghouse have with the Baltic Exchange or with the index providers, wherever they are, and to be able then to say, right, what are you going to do about it?
Yeah.
We are now, there's about 40 companies that are members.
Wow. Okay.
But there are.
And how long has this been established for now?
Well, we were celebrating our first year now.
Okay, amazing.
We were the first year. So we got 40 members that are paid up members. It's very small. You pay £200 or £400 a year, and then thereafter £200 so just to cover the cost of organizing meetings and stuff.
Yeah,
like that.
absolutely. Yeah.
But at the end of the day, I think it's extremely important with the numbers involved, with the financial commitment, that there is a body like that, not to constantly say to the clearinghouse you're doing things wrong, but to have a voice that is independent of everything else, and that can be quite effective because you're going straight to the Baltic, you're going straight to EX, you're going straight to SGX, or we could have a problem with an index provider, or we could have a problem with one of the clearinghouses. The more members we have, the more powerful we can become in terms of determining the way the market should evolve.
Yeah.
And now let's say we are at the stage where we have critical mass. I think we represent something like 65% of the traded volume in the market.
Wow. Okay.
Which is not bad.
Yeah.
So
but your opinion then matters, right? Because you have that weight behind you, and probably, I'm not sure you can disclose the names, but the names behind you, and in order to be listened to. Yeah.
I mean, Johnny B and I decided that, of course, Johnny B likes to wear many hats. But I mean, we shouldn't forget the dedication of that guy.
Absolutely.
In this marketplace. This guy, I mean, I look like a pussycat compared to him. I mean, the guy is relentless in pushing. And I know he's got a vested interest. He owns FIS, he's got a vested interest, but he does it with everything he's got, and he never stops.
He does.
He never stops. He's committed. And we've had in the past, we differed in opinions, but I have a lot of respect for what he has done. And the way we decided to do it is to say, okay, Philippe, you have your own trading company. You can say what the hell you like because it's your shareholders that are behind you, and they let you do what you want to do in terms of as long as it stays within certain boundaries. I don't have to shut up. If I am employed by a large corporation, I have rules that I have to abide. Here, I have the luxury that I don't, as long as I keep respecting everybody around me. That's all that matters.
Yeah, that's something I've noticed a big shift for myself working for my own business, is actually that I can go out on my platform, I can speak on LinkedIn, and I can bring up conversations.
Absolutely.
And not have that pressure or the restrictions to be, so you've got to be careful what you're saying. And that's really grown and developed me, my career, my business. So I absolutely resonate with that. I just want to go back again to EPHA. So, I read an article in TradeWinds that was saying, is it rebellion or restart? And the Baltic Exchange obviously has been a cornerstone for the freight market for centuries. And
essential.
How do you see the role of EPHA? And then you've got over that a bit lightly now, but where does that leave the Baltic Exchange? I know you said you're independent and you'll go to obviously several bodies, but I think there is in the market this kind of scene, is it going directly up against the Baltic?
No, I think we're there to keep the Baltic on its toes.
Yeah.
Because at the end of the day, they are doing a decent job in producing indices. They have a whole staff and an environment in which they have developed that for years, of course, since inception. The history is long. I mean, you talk about it started in 1985, so that's a long time ago. Yeah. So the Baltic Exchange is recognized as a neutral body, providing that data, as index providers. So that is good, because if you're like another body that has a vested interest in the market in another way, that's probably not as good. So you got to keep the institution on its toes. That's all. But obviously, what I've said to the Baltic, to Mark Jackson many times, we're not here to have a fight with you.
No.
We're here to make sure that the industry and that the products that you guys are pushing, and then the products that we trade, are fit for purpose and are evolving with the evolving financial world the way it is. Whether you think about algos funds coming in, the introduction of artificial intelligence, all that has to be followed. It has to follow in the evolution of the market, and we will keep on doing that. But I mean, there is one big health warning sign that we have discussed internally, is that nothing stops us as an independent association to go and talk to anybody else if we're not happy the way the market evolves. And that includes the Baltic, that includes the clearers, that includes any service provider that we are confronted with in the day-to-day operations of our business.
And the market is definitely trying to evolve. And this is something that you and I did a post on LinkedIn about the funds, and that we're seeing more trying to come into the market. Yeah. But we've had a bit of, when they're coming to us for talent, they're saying, well, we don't want someone who's 100% FFA. We want someone that has another product, because they're kind of a bit hesitant when it comes to the FFA market. And I feel there is this, like you're saying, an evolution. The funds have come in. We started off with power loss, and then now more and more are coming in. And we're seeing the demand for it, but then we're also seeing a block and a hesitation. So there's been obviously a lot of discussion lately around the sort of algorithmic traders in the freight derivatives market. So correct. What are your thoughts on this evolution, the influence of the traders? Is this good? Is it bad? And, where do you see this next step?
Well, first of all, the evolution of the marketplace. We spoke about phase 1, phase 2. Yeah. In my opinion, we're at the end of the phase 2, which is the OTC cleared. Yes. And a lot of markets have evolved exactly the same way. The oil markets have done exactly that. Yes. They've done it. And I can probably find some other markets that have done exactly the same thing.
Iron ore maybe as well.
Yeah, exactly. So to go from OTC non-clear to OTC clear is one thing. But when you have large pots of money coming from outside, completely outside of the shipping sphere, who are trading every market on the planet. Yeah. All these markets, the majority are all on exchange futures with proper, what they call ISIN numbers on Bloomberg and whatever, where they can allocate the trades through their back office, because basically the back office speak to it themselves right through the chain. And with FFAs, that's not the case. No. Because it's not a recognized futures, it's not an RIE, or recognized investment exchange, and therefore it hasn't got its proper identification code. Yeah. And therefore all these back offices of these large quants or algo funds, especially if they're coming from the United States, have got very strict ways of dealing with their back office matters. Yeah. And we've seen it. We've had one of those coming in with us, and they were really struggling with our back office, which was through Macquarie, which is our clearing bank, or through Marex, which is another clearing bank where we use. And therefore, they were constantly, they're contesting the positions they were having on a day-to-day basis, which is a nightmare because, we're here to try to make money for them. We're here to try to have a clear, view of what their portfolio is. And they were not contesting, but they were saying, no, I don't understand. This doesn't coincide. So it was kept on happening. And I think that is a big hurdle. And that's why I think the pot of money out there that is potentially coming into that market is far bigger than whatever is already trading today.
Yeah, I think there could be billions waiting in the wings.
And these guys they're powerful.
Yeah.
They will go to exchanges. They say, yeah, I want to trade this, but guys, sort yourself out. Put yourself on a futures exchange, and then I will trade.
Okay. And with that pressure from these markets, the OTC cleared derivatives, where do you see that heading?
Well, the OTC cleared derivatives will obviously slowly migrate into the futures exchange, into a futures contract, which then, I know if Johnny B watches me, he's going to hate what I'm saying, because obviously it has a potential negative influence on the brokerage market.
Right, yeah.
But obviously, I've discussed this exactly last night with one of my colleagues, and when the live floor went from a trading floor into screen, certain companies embraced the fact that they went into screen and they traded, but there was a minority. Yeah. But the minority who did it just had business that exploded. Absolutely. Because they took up the screen. So they took the brokers and they put it in front of the screen, and they just treated or talked to their clients via the screen rather than on the phone or on WhatsApp. Yeah. So it's another way of communicating it, but you are communicating in an environment where because nowadays most of the FFA brokers, they get both sides. Yeah. They get a buy and a sell. They take 2 commissions. Now, their fear is if it goes onto a futures exchange, they will lose one of the sides. But if the volume trebles, what's the problem? What's the problem?
So you lose half, gain 2 weeks. Like one step back to take 2 forward.
So the broker, the FFA broker who is involved, needs to switch very quickly into a screen trading environment and have people on the screen getting business done.
Absolutely.
Yeah, that's where I see the evolution.
So this evolution, and like we're saying, there could be potentially billions probably waiting in the wings if there's volume there. Is this where
there's already today, in certain instances, that large trading houses that have freight exposure that need to hedge, they're getting overrun by some of the algo funds in terms of the volume that comes in. They get orders that will say, okay, one of the big houses, and they get pushed on the side because the volume on the sell on the other side is just double or treble what they put in the market. That never used to be the case. Never used to be the case. When the big boys came in, they were not holding the price, but they're standing and everybody was hitting them on the buy on the sell side. But now they're getting taken out in terms of volume by these algo funds who have a lot of financial power.
So this is what you would say would be phase 3? Yeah. And this is going to be, in your opinion, the key factor, the only key factor that's going to drive this growth? Is there anything else that you think?
No, I think it's primarily driven by these people. They're at the door. Some of them are trading. They're at the door. They keep on pushing. And for me, it can only evolve that way. Because if we don't evolve that way, they're going to go away. They're going to leave the market, or they're going to go somewhere else.
So let's say the market drives forward and then we make the necessary changes to facilitate the growth. Where do you see this going in terms of numbers, volumes? I know you're just talking there lightly about how they've blown the trading houses with their numbers out the water potentially. But do you have sort of any numbers or volumes?
No, I don't have any numbers. But if you look historically of markets, like for example the oil markets, I don't know what the Johnny B, I'm sure, or Richard Hayes, Clarkson's, or people at SSY have the numbers about what is the amount of FFAs that trade in relation to the underlying value, financial value of the physical market. Yeah. I think we're pretty close to 1-on-1. I mean, my numbers might be wrong, but we're not a multiple. Yeah. I mean, the oil markets trades multiples of the underlying oil movements. A lot of these futures markets are trading in derivatives terms far more than the underlying value or the underlying physical.
At the moment, I think FFA is 3 times the underlying.
But the oil market is probably 10, 15 times that. And therefore, the scope is there definitely to grow more.
Again, something which we feel is, you said I don't want to upset Johnny B, and there's me, I've got friends who are FFA brokers and that's their livelihood. And I think a lot of them are potentially quite hesitant.
Hesitant about what?
By phase 3, by the growth. Like you were saying, they're quite nervous about going to screen because they feel that they're going to lose their business, right? And I understand why they are fearful of that.
Yeah,
right?
but I told you, I think that's what happened on the IPE when the oil markets went to screen, or when the life floor went. The guys who survived and flourished are the broking houses that embraced screen trading very quickly. And the ones who decided, no, I'm not going to get it. I mean, look at ICAP. ICAP suddenly decided that screens was the only way they're going to survive. It happened in the oil market. It happened on the life floor. But the ones that didn't follow the trend disappeared. Yes, I agree. Lost their job, disappeared. So it becomes under the responsibility of the people who run these desks to make a decision and embrace it fast and put the money behind it.
Absolutely. So they've really got to sort of roll with it or step aside.
But I mean,
you don't see a way for the market to sustain as it is?
Yes, it will sustain as it is if the market doesn't evolve into a futures exchange. I can't tell you what is going to be the trigger. I told you that what I think is that the big money that comes in will put pressure on the marketplace.
Absolutely, yeah.
And it depends how the marketplace deals with that pressure and where we want to go. The role of the EPHA will be important in that, because I'm trying to get the algo funds to become member of EPHA. Yeah. Because we want to understand what these guys think and the way they would like our market to evolve. I'm talking to one right now, and I'm trying to get some others in because they're not members yet. Yeah. And they represent this large volume that's potentially coming into this market.
Yeah, absolutely. I mean, like I said before, we've seen one fund historically, and now I think we've gauged there's probably about 20 who are now either in or looking to become part of it. So it's going to be really interesting times, and I think it's a conversation that I'd love us to have again in maybe 6 months, a year's time, to see where the growth has been and where the changes have been, or have the brokers put their foot down and not allowed it, right?
Yeah, but unfortunately, I think brokers putting their foot down, for the moment, they can do that because they control both sides of the trade. Yeah. But they've got to be very careful not to overstretch what they think they can control. Yeah. That's where, and I'm not saying that in a negative way, because you can use it very positively to convert your business into what I described. What is important also with that evolution is that all the parts of the chain has to be fit for purpose in this evolution. And that's why we keep on pushing the Baltic to make sure that they are on top of things. And that we are doing things the right way. I mean, the example of what's happened lately with the 𝗏𝗏 index conversion from a 10 TC to 11 TC, in the opinion of the IFFA, wasn't really very good. No. Because you have S10 TC that goes into 11 TC, but then no clearing. So we're still trading S10 TC now. Thank God, SGX and EEX will clear within the next 2-3 weeks, start clearing. But normally, the day that the S11 TC was introduced, it should have been clearing, or should have been arranged at the same time, and therefore then you could trade that new contract. That's the sort of thing, we look like a bunch of monkeys if you do it that way. If you don't do it orderly, and that means there's a lack of communication between the clearing houses and the Baltic, or the communication was there but they didn't agree, or the Baltic didn't want to wait, or that's the ins and outs, I don't know. And that's where we as an association, we are trying to make sure these things don't happen again. I mean, we are talking today, we are trading P4TC, and the P5TC has been there, for 7 years? Not being a single day traded on that new index.
No.
Well, that's not right.
So definitely a lot of work to still be done.
No, it's not a perfect environment, that's for sure.
But what's been so great today is actually the little bit of the history there, because even I didn't know that. And to see the old... No, but it's amazing, right? Because today I feel we've covered the history into phase 2 and now potentially the future. And there's just obviously so much growth for this market. And, you know, I'm grateful that I've come in when I did to see this change and growth. But there are still board boys writing up prices, and it's such an old school market with, quite frankly, I think some of the best brokers that I've ever seen, and you know, and actually wonderful people. So it's, you know, it's great to be a part of it, and so many characters like yourself and Johnny B. It's been amazing. So thank you so much, Philippe, for your time today.
Pleasure.
We're going to round up there, and you know, it's been amazing to have your insight and your expertise. So thank you so much.
Yeah, let's keep in touch.
Okay, amazing.
Okay, thank you very much. Thanks for your time.